May profits be upon you. Welcome to another weekly market forecast. I'm RT Money and I'm glad to see you. Hey, if you're picking up what I'm putting out, if you like what I'm doing here, just make sure you hit the like button at the end of the video and or the boost button and make sure you leave a comment. All right, say you like it or you want to see more of this or you want to see a particular market analyzed that I haven't covered, or you have a question about what I've said, or you got a differing opinion of my analysis. I would love to hear from you. I respond to every comment. Also, make sure you hit the subscribe button so that you can catch the updates that I release throughout the week. Now, let's get down to business. Let's look at uh, the economic calendar. All right, Monday we have bank holidays for the Canadian dollar and U.S. dollar, so the market will probably be pretty, you know, short range. It's not going to be a whole lot of volume there. All right, Tuesday we have CPI data for the Canadian dollar. We're talking about inflation rates and what they're how they're affecting their economy, right? And there's something important. So there we go. The New Zealand dollar is going to have an interest rate decision on Tuesday. Following that, on Wednesday, CPI for the pound and FOMC, the big one. All right, the Fed's going to make a give projections to let people know in the U.S. if they are going to uh, cut the interest rate or how many times it's going to cut it or whatever. It's going to let the investors know how best to direct their money. What is it going to be turn into a risk on environment or a risk off environment, right? Uh, then we have Thursday. So a couple of red folder news, unemployment claims, and Friday we got plenty of red folders and plenty of news. There's going to be some good, juicy volume in the markets this week. Now let's look at the S&P. It says here ES, right? That's the S&P futures. All right, and what I'm looking at is one. This is the daily time frame, just to show you that yes, we were correct in the analysis that I gave. All right, we hit our uh, buy side liquidity target and just missed. Look at this. Look at this. Man. Look how close that came. That's ridiculous. But that's why the check mark is faded. I was almost right. All right, just missed it by a few ticks. But yeah, we were right on point with the bias. Yes, we were. Now I can get rid of those. Okay, and we can move on with the analysis on the weekly. You can see that the weekly, I thought I got rid of you. All right. On the weekly, we can see that the week closed very bullishly. Look, it hardly left a wick behind. It just it gapped down. Sorry, it gapped up. Sorry. All right. The previous week closed here. We gapped all the way up here and just shot up. All right, closing beyond the previous weekly high and looking to go towards these highs and this low range liquidity that you can clearly see on the daily here. All right, this will be a nice move that that we should see price just surge past these highs and everything. All right, because we already took these highs. Now, this one here represented a market structure break. I usually have it black. All right, a market structure shift. I'm sorry, and I'm looking for price to continue higher when we have a bullish market structure shift. All right, and taking that high and quite possibly that high. That's the potential. But what I want you to make note of on the daily is that there is a uh, a bullish fair value gap left behind that price could use to go higher. All right, I'm looking for price to dip down into this, maybe a two candle pullback, and then higher to these these highs here. So I am bullish, short term bearishness, and then bullish afterwards. All right. NQ, the NASDAQ. Yes, I got both of those buy side liquidity targets taken care of from last week's forecast. Just check out last week's, if you got some time, look at my last week's forecast. It was pretty on point as far as nailing the bias, knowing the direction of price. You need to know that. You need to know how to do it. I'm trying to show you how to do it. Okay. Giving you all the hints I can. All right. Giving you all the tips I can, rather. So we hit that. All right. This is that market structure shift that we saw on uh, the S&P. All right, it's bullish. It traded through, and then look, this was Thursday. This is Friday's candle. All right, took out that high. Beautiful move. Beautiful move. And the fact is that it traded through that high, which means what? It means that there is an intent by price to go higher. That's what I'm talking about. If it was just a wick, it would probably pull back. It would, there'd be a likelihood that it had a business to take care of down here. All right. But that's not what happened. All right. What happened is it traded through and it left a bearish fair value gap here. I like to see those bullish fair value gaps. I like to see them because price likes to use them to go higher. Now, some people are going to say, oh, it closed above the third candle closed above the high of the previous candle. That means there's a breakaway gap. Not necessarily. Not necessarily. It's possible, but if price closes in a doji, if the next candle opens up high, sweeps this high, all right, sweeps that high, and then pulls back in here. All right, I'm telling you, it's coming back to this doggone fair value gap to mitigate and then go higher to offer fair value. Listen, you know, all what do you call these things? Fair value gaps are not made the same. All right, just remember that, and you have to take them on an individual basis and make sure you consider the context in which you find that fair value gap. All right, that'll determine whether it's dependable or not. All right, I want to get rid of that. There you go. And we're going to move on. So I'm looking for price to tap, to possibly tap that and move higher, or it could continue higher here. But next week, I'm looking for this to be my buy side liquidity target. All right. All right, we'll start with the high of this one first. All right, if we go to the Dow, if you remember, I didn't give a whole lot of explanation with the Dow, but you can see that if I can use this, yeah, you can see that we went into this mess. All right, that's a mess. All right, and nobody wants to mess with that. All right. But what am I looking for? I'm looking for when the price goes into consolidation like this, I'm looking for a breakout of sorts. You see price doing this, you're looking for a sweep of the lows and then a move towards those highs. You understand? And we have the high here and the low here and the high here. I'm looking for price and we're right in the middle. This is not an area you want to mess around in. All right. I'm looking for price to push down. All right. What I would like to see is price take this low and tap into this area of demand and consider, then hit the equilibrium of this trading range. From this low to this high is a trading range. All right. You divide it into two. You have the top part is a premium prices and the bottom is discount prices. You want to take your longs from discount. You want to take your shorts from premium. All right. And right now, price is in premium. And I want to see it come back to at least that 50%, which is right below this low, which could act as inducement to get into this demand zone. That's what I'm hoping for. This is what I'm hoping for. Whew. Okay. But price could very well just shoot up here, pull back into the consolidation and go higher, we'll see. But this isn't something I'm going to trade. This is something I use to gauge the other indices with. Now we're looking at oil. Oil was deep. Oil was was interesting. All right. What did I tell you last week? All right. I told you that I was looking for price to take this low. I was looking for this low specifically to be taken out. All right. And I said I didn't want it. I'm not interested in shorts until there is a market structure shift. And this was the low I was looking for to be broken. We finally got that on Thursday. Right. We got it on Thursday. All right. And you can see when it did that, there was a bearish fair value gap right there. Can I get it? Can I get it? Where is it at? There it is. There was a bearish fair value gap in there. And what did price do? Price pushed back up into that bearish fair value gap, and now we're on our way back down. That's the way fair value gaps work, folks. So that's used. We don't have to refer to it anymore. All right. But I also mentioned this high here. What did I say? I said if price takes out that high, I'm not interested in taking buys. All right. But if price had traded through and closed above that high, all right, then that would indicate to me that that would be a price given an intentional, given some intention there. It would indicate that price may be turning around and heading up to higher prices. All right, but it came back down, gave us the bearish market structure shift, pulled back up into demand. Into supply. All right, which is this whole area. This whole area would act as supply. All right, the area of fair value, if you will, and price push back up into that bearish fair value gap instead of coming down. I'm looking for price to continue down the same way. We don't need that check sign there anymore. I don't know why I still got it up there, but I did call that right correctly, and I just want people to know that they can depend on me. All right. Now we can get rid of this fair value gap here from the from the weekly, because it's no longer relevant. It's been used already. Okay. So I'm looking for price to continue down, and then we'll be looking to see if price will find the top of that opposing candle for the area in which it would find support before it starts going down again. But that would be, if I'm going to take a short, this is where I want it to end, right around there. Okay. Matter of fact, let me give you this. All right. That would be 69.67. All right. Right around 700. I want to see price. Once it takes that low, there's going to be good reason for it to start to turn around and maybe hit a bearish fair value gap in order to go down further. All right. Because we're going into a lot of support here. You can see that. All right. So it's not going to be price just firing through that. That's not going to be that easy. Okay. So if we look at gold, what do we see? I correctly called this high. I said price would reach that as a buy side liquidity. All right. And this was last Friday's candle. So we're going to take that high out and continue higher. That was all I said. Correctly called. Price pushed higher. And I said there's no reason to take any shorts whatsoever. Now, what's coming up next week is the fact that there is an area where price could find reason to take shorts. This would represent a market structure shift at this low. Okay. So we want to be cognizant of it. All right. I don't want to take buys as long as it stays below that low. When price hits that low, I don't want to take buys. Am I interested in taking shorts at all-time highs? No, not really. All right. I'm waiting for, if price takes out this low. All right. Price takes that low out. I got to hold off on taking buys, and I'm not confident in taking shorts as of yet. All right. Now, what did I tell you about opposing candles? There's an opposing candle there. Price could come down find that opposing candle and find support there and go up higher. All right, you can see how it reacted to this one here. Boom, right? And now we're back. So I'm looking for price to target that low, which is at this opposing candle, and I'm looking for price to react from there. And we'll look for fair value gaps along the way, right? Does that make sense? I hope so. If you don't think so, give me a comment. Write it down and give me a comment. All right, but I'm looking for price to hit this line. If I get in a short, if somebody gets into a short, it doesn't have to be me, but if it gives me a market structure shift here, I might be inclined to look at shorts, because on the 4 hour you can see that the price has created a bearish fair value gap there, and it could use what the heck just happened. Oh man, this is driving me nuts. Hold on. Give me 2 seconds. Give me 2 seconds. Thank you. Wow, man. You're going to do that in front of company and everything? All right. So the price could use this to come down lower, but this is on the 4 hour. All right. I'd like to see something more definitive happen. This is a buy before the sell. All right. So this would represent an area of fair value. Price gets below that, I'm looking for price to bounce back up and then continue lower. Do you understand? All right. So right now, in the short term, in the near term, I am bearish in gold. Bearish in gold. We're about to hit some market structure shifts there to the downside. So we might be coming back to test the breakout area, and that would be here. Okay. Well, who's next? Silver. All right, silver. I like silver. I told you that I had it in this channel, and that there's a good reason to think that we may be going from the bottom of the support area to the resistance area of this channel, and price took out that area that I highlighted in the last video, the last forecast. Took out that buy side liquidity. We hit our target, yes, and now this becomes a break, area of structure being, a market structure shift, a bullish one. I'm looking for price to pull back into demand. Where's price going now? What is the possibilities? Price could come back down, take out these relative equal lows into this daily fair value gap, which I like, and continue higher from there. Right below these relative equal lows here. I'm looking at, that's what I think. This is a high probability trade to the upside. We'll see. All right. I got another one to do. Platinum. Now, platinum's not easy. Platinum was not. It hasn't been easy, but it's getting easier. If we go to the weekly, you can see the weekly candlestick looked like it wanted to go higher. Then the sellers came back in and forced price to the downside. Why? Because we are in this range. Look at this range. All right. And what you want to do in ranges like this, I don't understand why my pen isn't writing. All right. What you want to do in ranges like this is divide it into the top 25% and the bottom 25%. And you see how price reacts to each side of it. We are in the top 25 and coming down. I am bearish in this market at the moment. And you'll see that I called it pretty successfully if you go and review the last forecast I gave for this market. And I am bearish in it. Look at that strong candle here. I'm looking for price to pull back up into that candle and then come back down further, taking this low out as a liquidity low, going into this area of demand, which has a fair value gap, a bullish fair value gap to bolster it. All right. If we go to copper, you can see that it's the same way, and I'm looking for price to come down, taking out this low here as liquidity into this area of demand, which is right at the middle of the trading range. So that's it. Enjoy your week.